What's up, fam? Wallet here, bringing you the latest alpha on crypto taxes. But first, let's clear the air. This isn't tax advice, all right? If you have specific questions about your situation, visit CryptoTaxAudit.com, where our team of experts can help. Now, back to the big news. Recently, there have been some misleading headlines and tweets on X about whether the IRS has delayed crypto tax reporting requirements until 2026. Spoiler alert, they haven't. On December 31st, 2024, the IRS issued Notice 2025-7, which provides a grace period for certain reporting requirements and provides clarification on specific rules related to cryptocurrency tax compliance. Before we dive into the details, though, don't forget to smash those likes, hit subscribe, and turn on notifications so you never miss out on the next big update. All right, grab an energy drink, set those trading alerts, and let's jump into this alpha. It's going to save you headaches. All right, here's the scoop. Notice 2025-7 acknowledges that most major exchanges, like Coinbase, Gemini, and Kraken, aren't fully prepared to handle detailed tax reporting yet. Specifically, they struggle with something called specific identification accounting, which is a fancy way of saying they don't know which exact crypto you're selling unless you tell them. Under current IRS rules, if you don't specify which crypto to sell before hitting that sell button, they default to FIFO, first in, first out. Why this matters? Here's the deal. FIFO, first in, first out, can increase your taxes during a bull market because it assumes you're selling the oldest, cheapest crypto you bought first, and more gains equals more taxes. Until the end of 2025, you can use specific methods like HIFO, highest in, first out, or LIFO, last in, first out, without notifying your exchange beforehand. Just keep your records organized. Until the end of 2025, you can use specific methods like HIFO, highest in, first out, or LIFO, last in, first out, without notifying your exchange beforehand. When you sell crypto, the IRS wants to know how much profit you made. That profit is called taxable gain, and it's based on your cost basis, what you originally paid for the crypto. Now, here's the important part. You don't just randomly pick which tokens to sell. The method you choose, whether it's FIFO, LIFO, or HIFO, can have a major impact on your tax bill. Let's break these down and see how each one works. Let's start with FIFO, or first in, first out, assumes you're selling the oldest crypto you bought first. Let's break it down with an example. Imagine this. You bought one Bitcoin at $25,000 in January, and later in July, you bought another Bitcoin for $35,000. By December, Bitcoin's price shoots up, and you decide to sell one Bitcoin for $50,000. With FIFO, the IRS assumes you're selling the Bitcoin you bought first, the one at $25,000. So here's how your taxable gain is calculated. Your gain is $50,000, sale price minus $25,000. Cost basis in $25,000 gain. What's the tax impact? FIFO can lead to higher taxable gains and bigger tax bills during a bull market. Why? Because it prioritizes selling your oldest and often cheapest assets first. Moving on, let's talk about LIFO, or last in, first out. This method flips FIFO on its head by assuming you're selling the newest crypto you bought first. Here's an example. Same scenario. One Bitcoin bought at $25,000 in January, another at $35,000 in July, and then you sell one Bitcoin in December for $50,000. LIFO assumes the Bitcoin you bought at $35,000 gets sold first. Your gain is $50,000, sale price, minus $35,000, cost basis, $15,000 gain. What's the tax impact? LIFO can help reduce taxable gains during a bull market by prioritizing the sale of higher cost assets. However, in a bear market, it may backfire by potentially increasing taxable gains if the lower cost, more recently acquired assets are sold first. LIFO falls under the specific identification method. The specific identification method allows taxpayers to choose which specific units of cryptocurrency to sell, making it possible to optimize gains or losses. Finally, let's talk about HIFO, or highest in, first out. Think of this as the smart tax strategy method because it picks the crypto with the highest cost basis to sell first. HIFO also falls under the specific identification method. All right, picture this. You bought Bitcoin 3 times, one at $25,000, another at $37,000, and the last one at $42,000. If you sell one Bitcoin for $50,000 with HIFO, instead of selling the cheapest Bitcoin, it selects the one you bought for $42,000, the most expensive one. That means your gain is calculated like this. Your gain is $50,000 sale price minus $42,000 cost basis equals $8,000 gain. The tax impact is usually the most tax efficient. Why? Because it focuses on reducing the gap between what you paid for your crypto and what you sold it for, keeping your taxable gains as low as possible. How does this impact safe harbor rules? Notice 2025-7 provides temporary flexibility for investors using centralized exchanges to choose specific identification methods without informing the exchange. You still need to maintain accurate records for IRS reporting. Compliance with safe harbor rules and accurate per-account reporting remains essential for the 2025 tax year. If you missed the December 31st, 2024 deadline, don't panic. Here's your plan of action. Get your inventory snapshot done. Think of your inventory as a snapshot of all your crypto holdings as of December 31st, 2024. It's the foundation for calculating your gains and losses in 2025. So, yeah, don't skip this step. If you were audited and missed the deadline, don't freak out. We've got your back. Our team can help you rebuild your records for December 31st, 2024, so you'll be ready to handle whatever the IRS throws your way. From here on out, make sure you're tracking every transaction in 2025. Keeping good records isn't just smart, it's the key to staying compliant and avoiding headaches later. The Safe Harbor Allocation Plan makes it easy to meet the IRS's per-wallet reporting rules. That's a wrap for today, folks. Struggling with crypto taxes this season? Don't sweat it. Head over to CryptoTaxAudit.com. Our expert team is ready to simplify these new IRS rules and ensure you're fully compliant. We specialize in crypto tax solutions that take the stress off your plate. Book a consultation today and let us help you take control of your crypto taxes with confidence. If you like the alpha we're dropping today, don't forget to smash that like, subscribe, so you never miss the next update. Make money, pay taxes, and make more money.